folks even age 75. And so my feeling is whether you're subject to a required minimum distribution at this stage or not, you should at least be understanding how they work if you are approaching retirement. And this guide goes through a number of year-end tips, but specifically a bunch of them that have to be completed by year-end, and required minimum distributions, with very few exceptions, is one of those items that you need to get done by year-end 12/31, or else face some pretty stiff penalties. But like I said, those rules have all changed over the last few years.
The guide this month is titled The Top Year-End Financial Tips and includes discussions of these items and a whole bunch more. How do you request the guide? Call 800-393-4001. Again, the guide is titled The Top Year-End Financial Tips, and it's available by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
The Financial Exchange and Veterans Development Corporation are proud partners of the Disabled American Veterans Department of Massachusetts. The DAV provides thousands of hours of voluntary services at our VA medical centers and is the only DAV department in the country to lead a veterans housing initiative for single veterans and for those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit davma.org. That's davma.org.
Securing your family's financial future is one of the most important elements of estate planning. Cushing & Dolan are experts in elder law. Their brand new guide is called Making the Most of Gifting Assets. It seems like an easy decision to simply leave everything to your children, but some gifts can cause major complications. Call 866-848-5699 and request your guide today. It'll help you understand the pros and cons of leaving assets to your children. Gifting can be beneficial. However, if the gift is a significant asset, like your primary home, and your kids suddenly decide to sell it, that gift could create massive capital gains tax problems. Whether you're deep into the planning process or just starting out, this new guide contains the information you'll need to make the right decisions for your overall plan. Get your guide today by calling 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
As a busy mom, my to-do list is full.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has information to help you and your family live a healthier life.
Visit goredforwomen.org/momlife today.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Kicking Thursday off here on the Financial Exchange. Chuck, Mike, and Tucker with you. And if you tuned into yesterday's show, you know that we basically spent the entire show discussing what a Trump economy potentially looks like. Today, we're going to dig a little bit deeper into that topic. So if you wanted instead to hear about CVS's earnings from yesterday, we might touch on them for like a minute and a half, but there's just not going to be much of that. If you're looking for us to talk about Hershey's earnings today, sorry, don't care. It's not that they're not important, but they're not important today.
Yeah.
There's only one thing that matters to markets right now, and that is figuring out what the economic picture for a second Trump administration looks like. And so that's where we're going to spend basically 2 hours, give or take 5 minutes, right?
Yeah, I think that sounds about right. So I know you guys did a fair bit of deep dive on this yesterday. One thing that I found interesting, we talked leading up to this, unless you've spent hours upon hours researching what your trade is going to be in the event of one outcome or another and building those trades up, then be careful about what you're doing here, because who knows? But there were a number of, in hindsight, successful trades that played out yesterday. And I think it's interesting kind of culling through those and pointing out, very, very few people had it exactly on their bingo card. But one, for example, would be this pending merger between Capital One and Discover Financial Services. Pretty household names. I think everybody's aware of where they are. Discover had the single best day yesterday of major companies, up 20%, with investors betting the Trump administration would be more likely to allow a merger to go through. Big banks in general, one of the best performing sectors, 6.2% to the upside on Wednesday. And I don't know, having thought through it all, I guess if you were spending, like we said, thousands of hours researching, who could potentially benefit, you might have been able to pick up on one or two of these trends. But, not a great day for tech stocks, for example, on average. Not a fantastic day for some other areas of the economy that still might benefit, for instance, from lower taxes and higher tariffs.
No, you look at your two areas yesterday, just broad sectors that performed best, and it was financials and energy. And I don't think either of these are particularly surprising.
Sure.
Financials, a lot of chatter about, potentially loosening regulation. And so, sure, you get, that pop there. Energy, everyone gets all excited about, hey, maybe we're going to be drilling more. And so you get this pop on that side. But I think you need to watch for potentially the second order impact, which is, yes, you might drill more, but if there's more drilling, then prices go down and maybe there's actually less profit. So I do think that this is going to be interesting to watch. Remember, during the second year of the Biden administration, energy stocks were one of the best performing areas in the market. The reason being there was less drilling going on and oil prices were through the roof. And so green energy was actually getting hammered and traditional energy was rallying. So I think you have to, watch these things over an extended period. I don't think you just say, hey, this is what it did on the first day. It's what it's going to do for the next 4 years. But you certainly had some movement yesterday. Another one that caught my eye, small caps.
Yeah.
Or as they've been known for the last few years, small craps. They just are on fire yesterday. The Russell 2000 was up, I think, 5.25% or something like that.
I think it was more. I believe it finished up 5.8. Yeah.
5.8.
Yeah.
So, these are companies where, remember, 40% of the Russell 2000 is not profitable. And the interesting thing about yesterday is that the Russell 2000 had this huge rally at the same time that the bond market was getting taken to the woodshed and yields were rising significantly. The 10-year U.S. Treasury was up 17 basis points yesterday.
Can we explain a little bit about that relationship? Sorry.
Yeah, so normally when bond yields rise, at least in the last couple of years, it's been bad news for small caps. The reason being their borrowing costs are a larger chunk of their expenses than larger companies. The reason being they're newer, smaller to market. They might have more debt relative to their size, and so their credit rating might also not be great. And so when yields have gone up, it's typically been something where on days when yields are up, small caps generally don't do very well because it's a major expense for them. On the other hand, yesterday, yields popping up meaningfully, like 17 basis points in a day it's a big move on the 10-year. And small caps rallied despite it. And I find that to be just something that we haven't seen. I don't know that you can read into this as, hey, that's going to be, again, a long-term thing, because ultimately, remember that stocks at their core are, to a certain extent, priced off of where bonds are and where bond yields are. And so rising bond yields make it challenging for stocks for two reasons. One being added expenses. The second being, hey, if yields get high enough, someone says, great, I don't need to take that much risk in order to get that return. I'm going to go buy the bond instead and not worry about it. Whether that's at 4%, 5, 6, or 7, who knows? But those are two ways that rising bond yields typically hurt stocks. We saw that in 2022, just as a key example for the broader market.
So potential theories on the small caps, I guess if you're assuming a stronger U.S.-focused growth potential, a smaller size company that only does business and has sales in the United States might surge a little bit more than, say, a Coca-Cola who derives half of their income from abroad. That could be a piece of it. Corporate tax rates, I actually don't know, but my guess would be that smaller size companies on average pay higher tax rates than larger size companies. So maybe there's something there. But then, tariffs, I have to say, I don't know that you can say one thing or another, right? If you're assuming higher tariffs, is that better or worse for small caps? And I would say it probably runs the gambit depending on what type of company you run. So I'm not sure there's anything there on the tariffs, but I looked at it as primarily as hey, if we're seeing and expecting stronger U.S. focused growth, then yeah, those companies that derive most of their income from the United States might fare better than your much larger size companies. A few companies not having the best days, specifically those who do import a fair bit from overseas, specifically shares of Nike, Target, Best Buy, Williams-Sonoma, and Restoration Hardware, traded lower for the day in spite of a very strong surge for the overall market.
All those companies tend to import a lot of stuff, and so concerns about tariffs, again, does it mean that you're, definitely going to see these companies struggle in the long run? No, I mean, if there's one thing that companies are good at figuring out, it's how to get around taxes, right? And it might be, again, they've got really good accountants. I don't even know what they're thinking up right now, but that they're on the phone with their accountants and also, by the way, their lobbyists saying, hey, if this happens, do this. And to their lobbyists, hey, we need to get a meeting with, whoever's going to be, the U.S. trade representative and figure out what the picture looks like and is there a way for us to get on an exemption list if something's going into effect? These companies aren't dumb. They don't just sit there and say, yeah, tell us what'll happen and we'll deal with it.
Yeah, I would also say the path for tariffs is pretty unclear to me at the moment. Right? And I don't mean that I don't think there will be higher tariffs. That seems quite likely. My point would be, are they China-focused like they were during the first Trump administration? Are they globally focused anywhere outside the United States? Are they based on just companies that have recently relocated jobs or manufacturing outside of the United States, or is it focused on everything? Might Nike be able to shift production to India and avoid tariffs? Several outstanding questions that we will not have a good sense for months to come.
Let's take a quick break here. When we come back, I want to, before we go any further, I think one of the big things is that I've been thinking about this for the last 24 hours, like not 36 hours, but close to it. Like I've been thinking about this for a while now. How similar is the approach going to be in Trump 2.0 compared to Trump 2.1? And I think that specifically, I want to talk about the scenario that he's coming into office in as far as the economy and why this may or may not lead to some different approaches. So let's talk about that when we return.
Wall Street Watch, a full update on the market's performance to date. Weekdays at 10:30, only here on the Financial Exchange Radio Network.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Fine-tuning your financial strategy as the year comes to a close is very important. So this month, we're sharing what we believe are the most critical year-end financial tips. As 2024 winds down, there are several opportunities for you to consider that may help you end this year without worrying about your overall planning strategy, such as contributing the maximum amount of money to your IRA or 401k plan, offsetting your capital gains, and maximizing your charitable giving. We'll walk you through these issues and even more in our new free guide called the Top Year-End Financial Tips. Get yours today by calling 800-393-4001. Again, it's the Top Year-End Planning Tips from the Armstrong Advisory Group, and you can request it by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Legacy planning is incredibly important. Cushing & Dolan's new guide is called Making the Most of Gifting Assets. In it, you'll learn that some gifts to your children can be problematic, especially if there are financial difficulties or a divorce proceeding. Get your guide today by calling 866-848-5699. That's 866-848-5699. Or request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
The Financial Exchange and Veterans Development Corporation are proud partners of the Disabled American Veterans Department of Massachusetts. The DAV provides thousands of hours of voluntary services at our VA medical centers and is the only DAV department in the country to lead a veterans housing initiative for single veterans and for those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit davma.org. That's davma.org.
Last year, we introduced you to Mark Vaughter, CEO of Veterans Development Corporation. Mark is a career military man, and we're proud to have him back as the presenting sponsor of the 2024 DAV 5K Boston.
I'm a proud partner of the Disabled American Veterans Department of Massachusetts. The DAV does incredible work, and it was one of the first organizations I became familiar with after my military service ended in 1984. As I built my company, Veterans Development Corporation, I did it knowing that I'd be giving back to fellow vets who need jobs, support services, medical supplies, and much more. I work with disabled veterans every day and is one of the key reasons why I'm such a big supporter of Dan Stack and the Disabled American Veterans Department of Massachusetts in this year's DAV 5K Boston. Please join me in supporting this tremendous cause by taking part in this year's event or by making a donation to the DAV.
Veterans Development Corporation is proud to be the presenting sponsor of this year's DAV 5K, taking place on Saturday, November 9th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The ultimate Boston sports auction to benefit the Disabled American Veterans Department of Massachusetts is underway. You could win 2 tickets to see the Patriots take on the LA Rams on November 17th, 2 tickets to see the world champion Celtics against the Cleveland Cavaliers on Tuesday, November 19th, 2 tickets to see the Bruins against the Edmonton Oilers on Tuesday, January 7th, and 4 tickets to a 2025 Red Sox home game. All that plus autographed merch from all 4 teams. To place your bid, call 888-205-2263. That's 888-205-2263.
That's right. The bid line for the Ultimate Boston Sports Auction is still open and will be open through Friday at 11:45. The bid line for that auction is 888-205-2263. That's 888-205-2263 to bid on all 4 of those incredible items in terms of tickets to all 4 major Boston sports teams and plenty of memorabilia items. It's all one massive package here, all to benefit the Disabled American Veterans Department of Massachusetts. Now's your chance to support our great American heroes. Call now to bid at 888-205-2263. That's 888-205-2263. And again, The auction is open through tomorrow at 11:45.
All right, Mike, I want to talk a little bit about what priorities this new incoming administration can actually execute on, because I heard from a number of people yesterday that were saying, hey, this is going to be just like 2017 and we're going to get tax cuts, things are going to move forward, like the market's going to rip, like yada, yada, yada. I heard this...
everywhere.
I'm trying to count accurately, but from actual humans, not from
sure.
someone writing something, but from actual humans, probably 15, 20 people.
Yep.
And so, trying to make sense of this, I'm just going to set the stage. In October of 2016, we're going 8 years back in time, isn't that right, Tucker?
Yes. Yeah.
Yeah, we're going 8 years back in time. I was
Yeah.
Sorry, I was trying to be subtle. Okay, we're going 8 years back in time. It's 2016. I still have hair. It's a different world. I didn't have hair then.
No.
And the 10-year Treasury yield at that time was 1.77%. The 2-year Treasury yield was 0.84%. So right off the bat, adding to the deficit back then was a fundamentally different proposition than it is today.
It's cheap.
For every $1 trillion of debt you added back then, you triggered $10 billion in interest expense. For every $1 trillion that you add today, you're triggering $40 billion in interest expense, 4 times higher. So there's a fundamental difference there to begin with. And I think that has to inform what we're looking at on the fiscal side, which is, hey, if you want to simply see a repeat of the 2016, 2017 playbook, it's going to cost a lot more in order to do it, and potentially could even push yields higher in the event that there is, a significant amount of more debt added. So I think that's point one that I'm looking at. The other piece that is fundamentally different, inflation. You take a look at the inflation picture back in, again, I'll do 2016 and even into 2017. And so if we look at I'm going to use CPI just because it's what everyone's more familiar with.
Sure.
If we look at CPI in October of 16, the 12-month CPI, then this is before Trump came into office, was running at 1.6%. Core CPI was running at 2.2%. If you look at where we stand today, headlines at 2.44, core's at 3.26. Both are about 1% higher than they were. And the question is, from a fiscal perspective, if you just pour, more money on the fiscal fire, does it cause a reignition of inflation? And if there's one thing that you have to take away from the last 5 years, 2020 through 2024, it's that inflation is absolute death for governments. I saw this in the Financial Times today, and this is the statistic that matters in my opinion. They looked at 70 years of international elections that they classify as the 10 major countries, and they it depends on the year which one gets lumped in. Like in the 1950s, Sweden's one of them. Today it's not. You have more larger developed countries and things like that. But they look at all of these 10 different countries and say, hey, what did we see in terms of the governing parties? How did their vote share in national elections grow or shrink? And this is going back to 1948. So someone can do the math on it. I think it's 76 years of data that they have. This is the first time in 76 years that every governing party over those 10 countries lost vote share in elections that were held this year. It has never happened before. And so, to anyone who's, looking at the U.S. election results and saying, oh, this is just like a U.S. thing. It's, no, this is worldwide because we have literally never seen this before at a unified scale. Even in the 1970s, when inflation was high, you take a look at like 1971 elections, there were still a couple that ended up with local governments or national governments growing their vote share of the ruling party. So, I think if there's one lesson that the Trump administration is going to take from the last 4 years, it's going to be, guys, we can't have inflation because then we're dead. Is that a fair statement?
I would think so. So, yeah, I mean, I would think so. And I want to talk about a few other areas of the economy that were just had a lot more slack in them back in 2016, allowing for that type of spending to work. So, yes, I would think so. But on the other hand, Donald Trump's not going to be the next president. And I'm curious how much he finds to be important the idea of Republicans maintaining power after 2028. I'm genuinely unsure about that.
So I think there's, again, I've been thinking about this nonstop for the last 24 hours, so if it takes me the entire rest of the show just to get through this point, then sorry, but I think there's so much meat here because, like, trying to figure out the thinking is all that matters. Here's the thing about Donald Trump. If you look at, what's the one thing, if you were to say, hey, if Trump wants to leave a legacy as president, what's the one thing that he's going to want to be able to say he did?
I would think grow the economy.
Manage the economy well is how I would class. Like, he wants to be known as someone who managed the economy well.
The Reagan of his age is I think, how I would most appropriately describe it.
Whatever.
Sure.
His whole pitch to people is, I'm a businessman. I know the economy. I'll manage it well. That's the thing.
Yep.
Can you say that you manage the economy well if you have high inflation?
No. I mean, clearly the last 4 years is the proof of that. It does not matter where incomes go, where anything else goes. If inflation's high, people are pissed, and you're not going to keep that legacy.
So I think my view is, look, we all have an ego. Donald Trump is no different. And I don't know that Donald Trump's ego will allow him to make that kind of inflation mistake, because if he does, it's cooked. Like, that's the whole ballgame. You can't look at the last 4 years and say, yeah, I can let inflation run hot. We're going to continue talking about this because there's a lot of meat on this bone. It's a juicy beef rib from St. Louis, and we're just going to keep munching on this for a while. Quick break here. Wall Street Watch is next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Congress is poised to pass a bill to keep AM radio in cars. But time is running out. 82 million Americans risk losing the news, sports, talk, traffic, and vital emergency information they rely on. Text AM to 52886 and tell Congress to pass this bill now.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams, your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Last year, we introduced you to Mark Vaughter, CEO of Veterans Development Corporation. Mark is a career military man, and we're proud to have him back as the presenting sponsor of the 2024 DAV 5K Boston.
I am a proud partner of the Disabled American Veterans, Department of Massachusetts. The DAV does incredible work, and it was one of the first organizations I became familiar with after my military service ended in 1984. As I built my company, Veterans Development Corporation, I did it knowing that I'd be giving back to fellow vets who need jobs, support services, medical supplies, and much more. I work with disabled veterans every day, and is one of the key reasons why I'm such a big supporter of Dan Stack and the Disabled American Veterans, Department of Massachusetts, in this year's DAV 5K Boston. Please join me in supporting this tremendous cause by taking part in this year's event or by making a donation to the DAV.
Veterans Development Corporation is proud to be the presenting sponsor of this year's DAV 5K, taking place on Saturday, November 9th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke, a partner with the law firm of Cushing & Dolan, with their master's in taxation. And today we're talking about the implications of gifting assets away. Todd, if you're trying to protect your assets from the cost of long-term care expenses, what are the risks in giving your assets to a child rather than transferring them to an irrevocable trust?
Yeah, it's a very big difference, right? These irrevocable trusts that we do for Medicaid purposes, first and foremost, are incomplete gifts. So you're not actually making a gift at all when you put it into these trusts. But if you give it to a child, now you've made a completed gift. So, for example, if I gave away my house, and people do it, right? You are giving away the built-in gain in that house. You now don't have any control over the house. You can't sell it and buy another one if you want to move. You need the kid's permission for all of that. Plus, if you never sell it and you die, you've trapped the built-in gain for the kids. When they go to sell it, they're going to have to pay capital gains tax. Whereas if you keep it, you can control it, get a step-up in basis for the kids when they die, and still protect it from the nursing home through the trust. Either way, it's going to take 5 years. But gifting isn't always the answer.
Educate yourself about the implications of gifting your assets away. Request your free copy of Todd's brand new guide called Making the Most of Gifting Assets right now by calling 866-848-5699. That's 866-848-5699. Or you can request a copy on their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
After yesterday's massive rally on the heels of a presidential victory for Donald Trump, markets today are extending their gains as investors await the Fed's decision on interest rates at 2 o'clock, followed by a press conference from Fed Chairman Jerome Powell at 2:30. Right now, the Dow is modestly higher, up by 31 points. S&P 500 is up another 0.5% or 30 points, and the Nasdaq up another 1% or 188 points. Russell 2000 is pulling back narrowly by 0.33%. 10-year Treasury yield down by 6 basis points at 4.35%, and crude oil off by just over 0.75%, trading just above $71 a barrel. After its leap yesterday, shares in Trump Media and Technology pulling back by 20% so far today. Meanwhile, shares in Lyft surging by 29% after the ride-hailing company posted a stronger than expected fourth quarter outlook after it saw a sharp rise in sales in rider count. Elsewhere, Zillow jumping by 21% after the online housing platform beat street forecasts on the top and bottom lines in the previous quarter. Moderna swung a profit and posted higher than expected third quarter revenue, fueled by the launch of its updated COVID-19 and RSV vaccine, sending that stock up by 0.2%. Qualcomm said its profit nearly doubled and issued a quarterly revenue forecast above analysts' estimates, driven by strong demand for smartphones. The company also said its board approved $15 billion in additional share repurchases. That stock is up by nearly 1%. ARM Holdings up by 5% after the chip maker posted better than expected earnings and maintained its full-year guidance. And Nissan announced plans to cut 9,000 jobs and reduce production capacity by 20% after swinging to a net loss. I'm Tucker Silva, and that's Wall Street Watch.
Mike, last segment we were talking about just, key differences in the setup of this Trump term compared to the first one. Any other data points that you want to add to that?
Yeah, so unemployment rate, that's obviously an important one here. Donald Trump, look, I wouldn't describe the 2015 economy as terrible, but you have to put yourself back in that framework. There was a lot more slack in the labor market back then. The unemployment rate in October of 2016, which would be the only data you had ahead of that election, was at 4.9%, nearly 5% on the unemployment rate. Today, October of 2024, we're sitting at 4.1%.
Another one for you, Mike, just while we're going through them.
Yeah.
In October of 16, the labor force participation rate for prime age 25 to 54, so like what percentage of those people were in the labor force then, was 78.5%. Today it's 80.9.
So you don't have a whole lot more reach to get more people coming in to the labor market. And we're talking about immigration reform, too. So what does that do to the labor market? Homes for sale, that's another interesting one that I would like to dive into here, because there's a lot we're going to cover in terms of potential Trump impact on the housing market. Homes for sale in the United States, October of 2016, 4.08 million active listings. I believe that does include both single and multifamily. As of October 2024, 954,000. So if you have a lot more money in people's pockets because of things like tax cuts, without corresponding increase in supply, and I do think increase in supply is a key goal of a Trump administration for 2024, and potentially how you combat some of that inflation by doing some things on the housing market. But without that type of thing, you could see further inflation there just because of such an inordinately tight housing market right now.
I think that sets the stage in terms of key differences.
Right.
So, look, in 2017, the big thing was, hey, we're just going to do a massive tax cut. And remember the term animal spirits back then?
Yeah.
Like, remember, like, everyone was like, everyone just got all excited. And you can't do that right now in this setup. Like, Mike, we've talked about this. If you throw $1 trillion into the economy next year in the form of tax cuts, where's inflation ending up?
I don't know, but higher than 2.4.
Let's be intellectually honest about this. It's moving higher.
Yeah, higher than 2.4, right? Like, I don't think it's going to 9. I don't want to over-exaggerate things.
No. I'm not
but
saying
higher
that.
than 2.4.
It's going up.
Yeah.
We've talked about this. If you just throw $1 trillion into the economy next year, you can't do that and realistically just be like, yeah, inflation's going to come down.
But that does require some nuance, because that's exactly what you did in 2016. We didn't have any meaningful inflation over 2019, and that's why we're bringing up these points, is because the economy today, fundamentally different from what we were looking at in 2016. That's why you could have trillions of dollars in tax cuts in the first Trump administration with nothing in the way of inflation.
But let's also talk about the stated goals economically from the Trump campaign, now the Trump administration. A couple big ones that are out there. If you talk about trade, and this is a phrase that you're going to hear quite a bit, fair trade, not free trade. How do we make trade fair? Mike, in what world is fair trade cheaper than free trade? The correct answer is fantasy world.
I'm racking my brain.
Because it's going to be more expensive. I'm not saying bad. I'm saying more expensive. Like I'm building a case here for where I think this is going. Next piece. On the immigration front, we're talking about potentially a crackdown on people living in the United States illegally today and potentially reducing immigration in the future. Labor supply goes down. What does that do to labor cost, Mike?
Drives it up. I'll bring up one argument that I've seen on the other side of this. You could see weaker housing demand as a result of less immigration, so maybe there's some offsetting impact to the housing market. Suspect of that, but that has been brought up as a potential benefit to inflation if there were less immigration.
Do you have a lot of people who are in the country illegally buying houses?
Not to my knowledge, but they're living in some.
Fine. It's not going to free up housing inventory.
I want to acknowledge the argument, even though I'm not sure it really moves the needle on any way.
Big priority, reducing government jobs. We're talking about like government efficiency and things like that, right? That potentially helps on the fiscal side, but potentially also reduces, spending, which is something that creates a little bit of economic drag. And the tax side of things, if you're, basically saying, hey, we're just going to extend the cuts that we have and maybe make some changes on the corporate side to incentivize stuff coming back, I've heard the idea of a lower corporate tax rate of 15% for companies that make stuff domestically. That's something that provides some help at the margins. But ultimately, if you're going to do all of these things, and I'm not saying that the Trump administration will or will not, but here's the case that I'll make for where they're trying to go. It's something where in doing this, if you're able to accomplish it, it's going to result in some real pain in the short term. Costs are going to go up. Like that's, again, the reason that companies have chosen free trade is because it's cheaper for them. They have fatter margins. Like I can't make this any more clear. You don't bring stuff back to the U.S. and raise tariffs and stuff and magically have costs go down. Not right away.
Right.
Costs go up initially. Labor supply is reduced. Like this creates drag on the economy. It's potentially like that if you implement this all at once, the next year has the potential to not be great. But, and here's the but, I think we have to look at this in terms of also who's going to be taking, roles in the administration. And the scuttlebutt that's out there right now, the most important one that's out there is Secretary of Treasury. The three names that I've seen floated as potential frontrunners. First is Robert Lighthizer, who's the U.S. Trade Representative from Trump 1.0. Second, John Paulson, big hedge fund manager, made, I think, like $4 billion back in 2008 betting against the housing market. And Scott Bessent, who is an advisor to the Trump campaign. He also founded, I think Key Square Capital. Key Square Capital. And they do like all kinds of different investing stuff. So I think if you look at this, Lighthizer the guy who I think probably has the inside track just because he's already been in a Trump administration and knows him, and they get along very well from what I hear.
Sure.
And Lighthizer is the guy who ultimately, you look at his biggest priorities, it's fair trade and cutting government expenses. And those two things are going to add cost and reduce growth in the short term. But I think the selling point to Trump in terms of leaving his legacy long term, hey, you're going to have some pain in year one. But the aftermath of it, when you have a situation where, you've now built the foundation for more robust U.S. growth in the future because of doing this, is, hey, for the U.S. Treasury Secretary, it's the idea that, hey, you want to look like, what you want to be like what Paul Volcker was back in the 1980s. The guy who raised rates, just said, you know what, screw it. I'm just going to nail inflation. Even if it costs us a recession, even if that's where we have to go, that's what I'm going to do because I know the longer-term path is better there. Now, I'm not saying this will work or will not, but if I'm putting together these different pieces, this is what it potentially looks like for me is, hey, it's not a repeat of Trump 1.0, which is, hey, we had an economy that was okay, not great, and by throwing a big tax cut at it, you added a whole bunch of growth that was needed at the time. It's much more, how can I restructure the U.S. economy, even if it causes some short-term pain, in order to give a better long-term growth platform? That's what I think the story is going to be, and that's what I've put together over the last 36 hours. It's a fundamentally different story than 2016, 2017. I'm not saying it's good or bad. I'm just saying this is where all of this stuff is pointing to me. Because if you think we're just going to be like, hey, tax cut next year and that's it, I don't know.
That doesn't move anything.
It's kind of a tough putt for me in an environment where core inflation's still running at 3.2.
Yeah.
Let's take a quick break, and then I want to dig in on a couple other things here because I'm sorry, it's just there's so much to talk through on this, and I think it's really interesting where this can go, and I don't know how it's all going to play out, but let's take a quick break. When we come back, I want to talk about some of the geopolitical stuff because I think that's another place that is also fundamentally different from 2016 and 2017 when Trump first came into his first term in office.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network. The following is an important message from SAB Solutions Incorporated, your trusted advisor for companies needing inventory management. Visit them online at sabsolutionsma.com.
Does your warehouse need help with tracking inventory? Are you dealing with customers who are bothered by missed shipments and stock discrepancies? I'm Colleen Sullivan with SAB Solutions. At SAB Solutions, we've been a trusted advisor to a wide variety of companies over the last 15 years. We offer our clients customized solutions to track their inventory using real-time data and digital technology. Our barcode scanning capabilities will help eliminate manual processes which are time-consuming and can cause errors that delay shipments. Our solutions will provide you with a competitive advantage, saving you time and money, while allowing you to operate more effectively and efficiently. Now, through the end of October, we're offering a no-cost assessment. You can schedule yours today by visiting us online at sabsolutionsma.com. That's SAB, B as in business, solutionsma.com.
Securing your family's financial future is one of the most important elements of estate planning. Cushing & Dolan are experts in elder law. Their brand new guide is called Making the Most of Gifting Assets. It seems like an easy decision to simply leave everything to your children, but some gifts can cause major complications. Call 866-848-5699 and request your guide today. It'll help you understand the pros and cons of leaving assets to your children. Gifting can be beneficial. However, if the gift is a significant asset, like your primary home, and your kids suddenly decide to sell it, that gift could create massive capital gains tax problems. Whether you're deep into the planning process or just starting out, this new guide contains the information you'll need to make the right decisions for your overall plan. Get your guide today by calling 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Fine-tuning your financial strategy as the year comes to a close is very important. So this month, we're sharing what we believe are the most critical year-end financial tips. As 2024 winds down, there are several opportunities for you to consider that may help you end this year without worrying about your overall planning strategy, such as contributing the maximum amount of money to your IRA or 401k plan, offsetting your capital gains, and maximizing your charitable giving. We'll walk you through these issues and more in our new free guide called the Top Year-End Financial Tips. Get yours today by calling 800-393-4001. Again, it's the Top Year-End Planning Tips from the Armstrong Advisory Group, and you can request it by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Heads up, athletes, coaches, and parents. Play for life, not just points. Hypertrophic cardiomyopathy, or HCM, is the leading cause of sudden cardiac death, especially in black athletes in sports like football or basketball. If you feel shortness of breath, chest pain, and fatigue, or have a family history of HCM, talk to your doctor. Don't let HCM bent you for good. Learn how to stay in the game at heart.org/HCM student athlete. Your heart, your health, your move.
Now's your chance to support the Disabled American Veterans Department of Massachusetts by bidding in our ultimate Boston sports auction. You could win 2 tickets to see the Patriots take on the LA Rams on November 17th, 2 tickets to see the world champion Celtics against the Cleveland Cavaliers on Tuesday, November 19th, 2 tickets to see the Bruins against the Edmonton Oilers on Tuesday, January 7th, and 4 tickets to a 2025 Red Sox home game. All that plus autographed merch from all 4 teams. Bidding ends this Friday, so call now. 888-205-2263. That's 888-205-2263.
Hey, isn't it time for you to fall naturally in rhythm with America's Caribbean paradise? The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John, and they're the perfect spot for your next incredible vacation. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the peace and tranquility of St. John, the U.S. Virgin Islands is everything you need to enjoy a spectacular holiday. Go to visitusvi.com and check out the American Caribbean, where you'll find all the information you'll need to book a trip that you'll never forget. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport required and no money to exchange. Make it a romantic getaway or a week-long family vacation. The friendly folks of the USVI are waiting to welcome you with open arms. So get out of the cold and head to America's Caribbean paradise. Go to visitusvi.com and book your trip of a lifetime today. That's visitusvi.com.
Mike, we got a little bit more to dig into in terms of, again, just one more difference that I want to touch on, and that's the overall geopolitical picture now versus 2016.
Sure.
You look at, obviously, the Middle East, which is in a vastly different spot, and the continued escalation between Israel and Iran through direct confrontation is something that I think you have to be fundamentally wary about as far as how that may impact energy prices in the near term.
Okay.
I think that's going to be something that you have to, again, like you look at, I think it is increasingly likely that Israel takes stronger action against Iran given the cozy relationship that Netanyahu and Trump enjoyed during Trump's first term.
Mm-hmm.
I think that's increasingly likely, and that gives kind of a fat right tail to oil prices with the potential that they move much higher in the short term, if something were to happen. So you add all this up, and I think it's a picture that, again, depending on how it ends up playing out, I don't know that in the short term it's as rosy as the first year for the first Trump term. But it potentially builds that foundation for stronger growth from there.
Yeah, I think the key takeaway that I have would be, we can talk about all the individual scenarios, but today you have an economy that is far more at risk of high inflation than it was in 2016. It does not mean that it will come to pass. A really, really important distinction here. And, depending on how policy develops, depending on what gets implemented, what does not, you can create capacity in this economy in some way, shape, or form, or maybe we see that miraculous improvement to productivity that we've been seeing over the last few years, power surge through something, like I said, miraculous, but I don't think you can rely on, miraculous productivity improvement to avoid inflation. And so, again, the whatever that Trump administration is that gets formed looks like, they're not a bunch of dummies. They are well aware that this economy has the potential for higher inflation. They're also well aware of how people feel about high inflation. And so it does shape what those policies are going to look like. You mentioned the global stage. I guess.
Can we just talk about productivity for 1 second?
Yeah, please.
Did you happen to notice the productivity data that came out this morning?
No.
I did.
Not even close.
I did, because despite, focusing on, all this other stuff for the last 36 hours, we did get productivity data at 8:30 this morning. The expectations were for productivity to be rising at a 2.5% annualized rate. Came in at 2.2. It's a miss. The prior reading, which had come in at 2.5, revised down to 2.1. So this is the meat. And as a result, unit labor costs, which the prior reading of 0.4% was, looked at as, hey, like, this is something that takes pressure off inflation, revised up to 2.4. And for the current quarter, or Q3, expectations were at 1.0, came in at 1.9. So, yes, the point is the exact one you just made, which is you can't put all your eggs in the productivity basket.
Right.
It's not that big of a basket, and there's too many eggs.
Really pushing this analogy, huh?
I could keep going if you want.
Yeah. So, look, again, it's an important framework to have, and history echoes itself, but it never exactly repeats itself, and you likely won't see an exact repeat of the 2016 Trump administration, nor would you want that for the economy that they face today.
Let's take a quick break here. We still got a lot more to get to in hour 2 of the show. A whole lot more coming up in just a little bit.
Legacy planning is incredibly important. Cushing & Dolan's new guide is called Making the Most of Gifting Assets. In it, you'll learn that some gifts to your children can be problematic, especially if there are financial difficulties or a divorce proceeding. Get your guide today by calling 866-848-5699. That's 866-848-5699. Or request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
The Financial Exchange and Veterans Development Corporation are proud partners of the Disabled American Veterans Department of Massachusetts. The DAV provides thousands of hours of voluntary services at our VA medical centers and is the only DAV department in the country to lead a veterans housing initiative for single veterans and for those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit davma.org. That's davma.org.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up, because we have something better.
Stronger, more powerful.
We have each other.
When we come together and go red, the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it, and your property. If you owe the IRS back taxes or you haven't filed in a while, the tax relief line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. We have a guide this month. It's titled The Top Year-End Financial Tips. Mike, one of the things that everyone likes to talk about at the end of the year is gifting. And when we talk about making gifts of, financial assets and money, there are some rules that you have to be aware of.
There are, yeah. There's some limitations in terms of how much you can gift in a certain year without facing certain tax filing requirements. I think the biggest one, though, we're heading into election season, obviously. We're going to have a new president one way or the other, and potential changes to things like estate tax rules. And so gifting is probably front and center for a lot of folks out there. Under the current setup, the estate tax limitations are basically going to be cut in half should changes not be made. And so if you're looking at gifting strategies, that is one of those that does need to get done by December 31st, and we've got a lot of information on it in this month's guide.
Another one that needs to be addressed by the end of the year, tax loss harvesting in after-tax investment accounts.
Yeah, something that gets looked at and we talk about fairly frequently. But again, a December 31st end date here. And so if you are looking at tax strategies for how you can potentially reduce your bill that you owe the IRS at the end of the day, it can be a successful one. It's just one of many things that people look at towards this time of year. But once again, doesn't do you any good if you wait until January 2nd to get this stuff done. And so if you're looking at those items, this guide's for you.
Our guide this month is titled The Top Year-End Financial Tips, and the way to request it is by calling 800-393-4001. Again, it's the Top Year-End Financial Tips, and that number to call is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Isn't it time for you to fall naturally in rhythm with America's Caribbean paradise? The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John, and they're the perfect spot for your next incredible vacation. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the peace and tranquility of St. John, the U.S. Virgin Islands has everything you need to enjoy a spectacular holiday. Go to visitusvi.com and check out the American Caribbean, where you'll find all the information you'll need to book a trip that you will never forget. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport required and no money to exchange. Make it a romantic getaway or a week-long family vacation. The friendly folks of the USVI are waiting to welcome you with open arms. So get out of the cold and head to America's Caribbean paradise. Go to visitusvi.com and book your trip of a lifetime today. That's visitusvi.com.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Last year, we introduced you to Mark Vaughter, CEO of Veterans Development Corporation. Mark is a career military man, and we're proud to have him back as the presenting sponsor of the 2024 DAV 5K Boston.
I'm a proud member of a military family, including my father, Victor, and my brother, Timmy. Serving my country was one of the greatest achievements of my life, and it's why I choose to give back to this special community. My father built Veterans Development Corporation, and I am honored to continue his legacy of working to help many disabled veterans and their families. It also gives me great pleasure to once again be the presenting sponsor of this year's DAV 5K Boston. I hope that by sharing my story, many other disabled veterans will be able to reach their goals once they conclude their service.
Veterans Development Corporation is proud to be the presenting sponsor of this year's DAV 5K, taking place on Saturday, November 9th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Kicking off hour 2 of the Financial Exchange, and markets positive, but a little bit more mixed than yesterday. Actually, the Dow just went negative for the day. The Dow's off 21 points. The S&P's up 32 and NASDAQ up 221. So this much more like what we've seen for the last couple of years, with tech leading the way and everything else kind of getting dragged along the best it can. The 10-year U.S. Treasury reversing some of its move from yesterday, down 8 basis points to 4.34%. We've got oil today down 21 cents a barrel to 71.48. The AAA national average for gas prices is down 0.1 cent to 3.10 6/10. We still can't get below that 3.10 number. Let's see. We've got gold today back up $29.10 an ounce after losing a couple percentage points yesterday. So a little bit of a retracement on bonds and gold as well as oil. U.S. equities, again, generally still moving up, but it does look like again, kind of reversal of yesterday. Bank stocks getting hit today. J.P. Morgan down 3.25%. Wells Fargo down 2.6%. So, again, this is why you can't read too much into one day of moves. It doesn't mean that that's what you're going to get for the next year, 2 or 4 from a Trump administration stock market. You kind of have to take it as it comes. Mike, I said that we were going to spend most of our time today talking about the potential, outlook for a Trump 2.0 presidency. I think we do need to take a brief bit of time, maybe this segment, in order to talk about what normally would be a big deal, which is, hey, there's a Fed meeting this afternoon.
Sure is. Yeah, 2:30 p.m. You're going to hear from good old pal Jerome on the state of the economy. So to structure things going, I know we've talked a lot about that propensity for higher inflation, that possibility down the road depending on policies coming from a Trump administration. For the Federal Reserve right now, they are on a path of rate cuts, and I am very certain they will receive questions about markets yesterday, the presidential election, and I'm also very certain that they will do their very best to not really acknowledge those questions and just basically tell people that they will see what happens during a Trump administration, and there's no point in reading too much into it at this point. Do you expect anything different on those questions?
No, I mean, look, they're just going to say, hey, look, we're data dependent, we're going to do blah, 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 and yada, yada, yada. The piece that is interesting, and this to me is almost more evidence that we're kind of in that soft landing phase still right now. Stanley Druckenmiller is, again, a very well-known trader and investment manager who's done quite well for himself over the course of his life. And his quote here is, when this whole inflationary episode started, I say 2 years ago, 2.5 ago, I was confident inflation was going to come down, which I was right on, but I was worried about the economy, which I was completely wrong on. You can take this with a grain of salt since I had one right and one wrong there. I've switched to being more worried about inflation going forward than the economy himself. So, look, Stanley's a smart dude. No doubt about it. The reason I say, look, this could just be, kind of the soft landing is it was only a couple months ago that Jeremy Siegel went on, I don't know, at least one morning show. It was either Bloomberg or CNBC. I'm pretty sure Bloomberg, and was calling for an emergency 75 basis point rate cut because unemployment was moving up heading into the fall.
Yeah.
You remember this, and I made fun of Jeremy Siegel because, again, Siegel is a smart dude. He's got like a PhD from Wharton. He's no dummy. He's not stupid. But what he said was stupid that day. And like when you do that, you have to be called out, because when you're calling for emergency 75 basis point rate cuts that week when there's not a Fed meeting for another 2 or 3 weeks, you have to be confident that there's an actual emergency happening, and it's been pretty clearly borne out over the last 8 weeks now that there just wasn't. So it dovetails into this where now we've got, a couple months of economic data that looks better. Is this real, or was the 2 months before this real?
I don't know.
My answer is both. And that's not just, I'm not just being cute about this. What I'm saying is the soft landing is not linear. It's not like you just come down in the plane and you get to the runway and you're like, oh, like this is great. It is alternating between time periods where things look like they're cooling down too much, but then don't, and look like they're heating up too much, and then don't, because the economy's not stagnant. It doesn't just get to like a level place and hang out. And so the key on the soft landing is that you have those guardrails where it doesn't heat up or cool down too much, and that's the bouncing that we're going through right now. So I'm not sure that there's anything there when it comes to Druckenmiller saying this, just like there wasn't anything there when Jeremy Siegel was yelling about emergency 75 basis point rate cuts. And look, Druckenmiller is much more, calm about this. I'm not calling him, because I don't think what he's saying is dumb, and I don't think he's calling for anything rash. But I'm wondering if this expression here of, hey, I'm more worried about inflation going forward, is simply because we're in one of these 2-month cycles where growth has looked better, and maybe we're getting ready just for a 2-month cycle where it looks a little worse.
Yeah. Again, I think just stopping the back and forth reaction to every data point would be helpful here. And I think actually the Fed itself is doing fine with that. Unless they come out this afternoon and say, oh, we've completely reversed course because of what equity markets have done, which would be really surprising, then they're not really reacting to all this. The potential mistakes that could be made would be, cutting dramatically too far and ignoring what might be inflationary policies coming out of D.C. But again, let's not hold them to the fire for things that they will be doing in like Q2 of 2025. In terms of expectations here, though, for this afternoon's decision, there's a 97% chance that the Fed cuts by 0.25%. There is likewise a 66% chance that they will cut at each of the next 2 meetings. There's actually a 1 in 3 chance now that they stop after this next rate cut. A month ago, that was much smaller in terms of likelihood. So clearly things moving around a little bit on the multiple rate cuts. But the questions that I now have would be, where do rates land? Where is that, neutral rate if they find one, and when do they find it, right? When does the Fed stop this current cutting cycle that they are in? I know it's going to be data dependent, but, what is going to be the signal for Jerome Powell? And I think that's actually an interesting question to be asked this afternoon. What are the signals you're looking for the pause in this rate cutting cycle?
Yeah, I think that's fair. Let's take a quick break here. When we come back, we'll talk about how excited Jay Powell is to work with President Trump again. Right after this, we've also got some trivia coming up as well.
Tune in for Trivia, brought to you by Applebee's. Every day at 11:20 for your chance to win cool prizes. Text us at 617-362-1385 and use keyword Applebee's. Complete rules are available at financialexchangeshow.com. This is the Financial Exchange Radio Network. Isn't it time for you to fall naturally in rhythm with America's Caribbean paradise? The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John, and they're the perfect spot for your next incredible vacation. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the peace and tranquility of St. John, the U.S. Virgin Islands has everything you need to enjoy a spectacular holiday. Go to visitusvi.com and check out the American Caribbean, where you'll find all the information you'll need to book a trip that you will never forget. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport required and no money to exchange. Make it a romantic getaway or a week-long family vacation. The friendly folks of the USVI are waiting to welcome you with open arms. So get out of the cold and head to America's Caribbean paradise. Go to visitusvi.com and book your trip of a lifetime today. That's visitusvi.com.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Fine-tuning your financial strategy as the year comes to a close is very important. So this month, we're sharing what we believe are the most critical year-end financial tips. As 2024 winds down, there are several opportunities for you to consider that may help you end this year without worrying about your overall planning strategy, such as contributing the maximum amount of money to your IRA or 401k plan, offsetting your capital gains, and maximizing your charitable giving. We'll walk you through these issues and more in our new free guide called the Top Year-End Financial Tips. Get yours today by calling 800-393-4001. Again, it's the Top Year-End Planning Tips from the Armstrong Advisory Group, and you can request it by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Securing your family's financial future is one of the most important elements of estate planning. Cushing & Dolan are experts in elder law. Their brand new guide is called Making the Most of Gifting Assets. It seems like an easy decision to simply leave everything to your children, but some gifts can cause major complications. Call 866-848-5699 and request your guide today. It'll help you understand the pros and cons of leaving assets to your children. Gifting can be beneficial. However, if the gift is a significant asset, like your primary home, and your kids suddenly decide to sell it, that gift could create massive capital gains tax problems. Whether you're deep into the planning process or just starting out, this new guide contains the information you'll need to make the right decisions for your overall plan. Get your guide today by calling 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Last year, we introduced you to Mark Vaughter, CEO of Veterans Development Corporation. Mark is a career military man, and we're proud to have him back as the presenting sponsor of the 2024 DAV 5K Boston.
I joined the Marine Corps when I was 18 and served proudly from 1981 to 1984. As CEO of Veterans Development Corporation, my goal is to give back to the veteran community, many of whom are employees of this company. This is one of the reasons I am so excited to be partnering with the Disabled American Veterans Department of Massachusetts on this year's DAV 5K Boston. The DAV works tirelessly to support many of our disabled veterans and provide them access to critical services that help them live comfortably every day. I hope to be part of many more success stories of our vets being able to achieve their goals and dreams when their service ends.
Veterans Development Corporation is proud to be the presenting sponsor of this year's DAV 5K, taking place on Saturday, November 9th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
The ultimate Boston sports auction to benefit the Disabled American Veterans Department of Massachusetts is underway. You could win 2 tickets to see the Patriots take on the LA Rams on November 17th, 2 tickets to see the world champion Celtics against the Cleveland Cavaliers on Tuesday, November 19th, 2 tickets to see the Bruins against the Edmonton Oilers on Tuesday, January 7th, and 4 tickets to a 2025 Red Sox home game. All that plus autographed merch from all 4 teams. To place your bid, call 888-205-2263. That's 888-205-2263.
All right, time for trivia here on the Financial Exchange, and it's brought to you by Applebee's. Take your friends or family to any area Applebee's and enjoy half-price late-night appetizers after 9 p.m., including boneless wings, spinach and artichoke dip, and warm pretzels dipped in pure cheese. And don't forget to join Club Applebee's to enjoy exclusive deals and specials. You'll get a free appetizer just for signing up. Now, that's eating good in the neighborhood, void where prohibited. Dine in only. Well, on this day in 1908, Butch Cassidy was gunned down during a shootout with Bolivian soldiers. Cassidy and the Sundance Kid traveled to Bolivia to escape the authorities in the U.S. after years of crime. Trivia question today: which actor portrayed Butch Cassidy in the 1969 hit movie? Once again, which actor portrayed Butch Cassidy in the 1969 hit movie? Be the 10th person today to text us at 617-362-1385 with the correct answer. You'd win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card tomorrow, actually. 617-362-1385, and the 10th correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Mike, let's talk a little bit about Jay Powell, and not on the job that he's done to this point, but there's a piece in Bloomberg today. It's titled, "Jay Powell is back in Trump's world and about to feel the heat." And I think this is going to be an interesting dynamic to watch here. From what I've gathered, it seems like Powell is likely to finish out his term as Fed chair. It ends in early 2026. And so he will be the Fed chair for the next couple of years. Remember, he was originally appointed by President Trump during his first term in office. And Trump was very aggressive in trying to jawbone the Fed to keep interest rates low during his term in office. So I think this is going to be interesting to watch the dynamic here and what Trump is looking for out of Powell, simply because if – and again, Jay Powell's like his own dude. You know, like ultimately I think he's a big boy. He'll figure it out. But I wonder if at this point with this economy and where rates are, can Trump, try to jawbone him lower and again, Powell maintains his independence. I think they've done a pretty good job of that through two different administrations to this point. But I'm curious how this relationship looks in this term, and again, whether or not it takes on a little bit different tenor than the first term, just because, as we discussed earlier in the show, it's a fundamentally different economy right now.
Yeah, I mean, can he try and jawbone the Fed lower on rates? Absolutely, and he will. Will he be successful? Will Jerome Powell actually feel that pressure? Will he maintain that independence that he's been pretty fierce about over the last 8 years? Those are all reasonable questions to ask. But I think certainly he's going to face pressure to lower rates, and frankly does under any administrations. The Trump one just happens to be the most public that we've seen about this type of thing ever, in terms of pressure on the Fed. The interesting piece, I think, goes back to what we talked about, which is there's probably some period of time, and I don't know when in 2025, but sometime in 2025, where based on where this economy is heading right now, at least, the Fed might hit the pause button on rates coming down. And I think that's probably justified. I think it's probably also not where Donald Trump will want rates to be ultimately when he's looking at the state of markets and the economy. And so that's where I think we are heading for a natural face-off here between where Jerome Powell sees this economy going and the propensity for higher inflation, and where Donald Trump is going to want to see rates going. And it is going to be, if nothing else, entertaining. Obviously, we still have the House to work out here, and that will factor into things as well. But I think from a pure possibility of inflation standpoint, what I think most economists would probably acknowledge is that a full sweep from Republicans has a higher propensity for more inflation than a split Congress. And by the way, the same probably would have been said about a full sweep by Democrats and Kamala Harris, because when that happens, you have more spending programs, more of your agenda can get through. And in either case, from these two candidates that we had, you had additions to the deficit that I think could reasonably be seen as inflationary.
Yeah, the projections I'm seeing, again, this is not going to be fully done. Honestly, some of this might not be done for a month still, just because of where some of these races are heading. But in the House right now, Decision Desk has their current projection at Republicans having 221 seats, Democrats 214. Remember, you need 218 for control. So Republicans could have 3 defections without, before they're unable to pass a bill. That's tight, especially when you look at, and the reason why it's tight is you look at some of these wins. Again, in either Republicans or Democrats, look at, candidates where I'm just trying to find the closest race. Here we go. Pennsylvania District 7. Ryan McKenzie beat Susan Wild by 1.4%, 50.7 to 49.3. Ryan McKenzie can't go and take a risky vote that would alienate 1% of swing voters because he loses then in the midterms. So that's what you see, in terms of how the size and scale of a majority impacts this. And this is another key difference, by the way, from President Trump's first term. Trump came into office in 2017. Republicans had a 241-seat majority in the House.
Yeah.
You could lose 20 people and it wasn't a problem.
Right.
You can lose 3 now. So it's tighter on that side. In the Senate, what we're seeing at the moment, Decision Desk currently has these 2 races you actually can't – one of them you can. Arizona, Ruben Gallego is going to most likely end up beating Kari Lake. The Pennsylvania one is still too close to call. McCormick right now holds a 0.4% lead on Casey, the Democrat. And the stuff that is still remaining to be counted, there's like 60 or 70,000 votes in Philly and then 10 or 20,000 elsewhere. And based on that, this thing is going to be within – it looks like it might be within like 10,000 votes in an election that's going to have 7 million votes. It's probably heading for a recount. It's probably heading for 1 million lawsuits. We might not know the answer on this one until Christmas.
Right.
It could be a little while there. Either way, Republicans likely to have either 52 or 53 seats in the Senate. Again, slim majority, but 2 seats in the Senate generally.
You can get stuff done. Yeah.
Well, here's the thing. You can get bills done through reconciliation.
Right.
True. You still can't pass new legislation without something across the aisle because of the 60-vote need on the filibuster. So this is something where, again, talking about what you can do legislatively, you have some room, but it's not as much as Trump had in his first term in the House, and that is a key difference there. We were talking about Powell. How did we get talking about this?
Propensity for higher inflation, I think, is where we got there based on the election.
Sure. And again, I think it's just good to keep people updated because they're still counting. I don't understand how you can still be counting this late, quite honestly.
Yeah. I don't have an answer, but but you should be able to figure that out a lot faster.
Here's the thing. Florida got embarrassed back in 2000 when they had the whole hanging chads and this and that, and we were literally counting for 2 months.
And then they fixed it.
They invested millions of dollars, and now we have Florida results completed in 2 hours.
When did we know Florida? We had 90% of the vote counted in Florida by 7:30.
They were done in 2 hours, and it's 10 million votes.
Yeah.
Just find what they did back after 2000 and be like, that's what we need to do everywhere.
Yeah.
Because they do a really good job there.
We spent a lot of time making fun of Florida. They count votes very efficiently in Florida.
They're fantastic at it. Whatever they're doing, you need to model your state after that. Not your insurance market, but what they're doing counting votes there, golly gee willikers, they're great at it.
Top of class.
It's fantastic. Taking a look at markets right now. Dow's off 20 points, S&P's up 35, NASDAQ up 240. Russell 2000 also dipping into negative territory. Mixed market as we're heading towards the bottom of the hour here. We're going to take a quick break. We've got our trivia answer after this. And then let's talk about Trump in the housing market. We'll just keep on moving right after this break.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network. Isn't it time for you to fall naturally in rhythm with America's Caribbean paradise? The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John, and they're the perfect spot for your next incredible vacation. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the peace and tranquility of St. John, the U.S. Virgin Islands has everything you need to enjoy a spectacular holiday. Go to visitusvi.com and check out the American Caribbean, where you'll find all the information you'll need to book a trip that you will never forget. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport required and no money to exchange. Make it a romantic getaway or a week-long family vacation. The friendly folks of the USVI are waiting to welcome you with open arms. So get out of the cold and head to America's Caribbean paradise. Go to visitusvi.com and book your trip of a lifetime today. That's visitusvi.com.
Heads up, athletes, coaches, and parents. Play for life, not just points. Hypertrophic cardiomyopathy, or HCM, is the leading cause of sudden cardiac death, especially in black athletes in sports like football or basketball. If you feel shortness of breath, chest pain, and fatigue, or have a family history of HCM, talk to your doctor. Don't let HCM bench you for good. Learn how to stay in the game at heart.org/HCM student athlete. Your heart, your health, your move.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke, a partner with the law firm of Cushing & Dolan with a master's in taxation. And today we're talking about the implications of gifting assets away. Todd, since the estate tax laws are projected to change on January 1st of 2026, significantly reducing the estate tax exemption, does it make sense to gift away assets right now?
You know, it's a big question mark. You have to think of a few things. One, look at the size of your estate. If the exemption falls to $7 million each and you're married, you can still die with $14 million of assets and not have an estate tax. So gifting might not be important from a federal gift tax situation. But the state exemption is only $2 million, so you can only shelter $4 million. So you might want to gift to reduce your state estate tax. However, there's basis to consider. If you give away low basis assets, you're trapping capital gain. And to do that, you might be paying more in capital gains taxes later when the kids sell the assets than you're saving in just Massachusetts estate tax. So you really got to think about whether it makes sense to gift or not. And if you're going to gift, you should probably set up a gifting trust. People might be gifting large assets away and not gift the assets directly to a child. Have them in a trust for the child's benefit and then protect those assets for them.
Educate yourself about the implications of gifting your assets away. Request your free copy of Todd's brand new guide called Making the Most of Gifting Assets right now by calling 866-848-5699. That's 866-848-5699, or you can request a copy from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Now's your chance to support the Disabled American Veterans Department of Massachusetts by bidding in our ultimate Boston sports auction. You could win 2 tickets to see the Patriots take on the LA Rams on November 17th, 2 tickets to see the world champion Celtics against the Cleveland Cavaliers on Tuesday, November 19th, 2 tickets to see the Bruins against the Edmonton Oilers on Tuesday, January 7th, and 4 tickets to a 2025 Red Sox home game. All that plus autographed merch from all 4 teams. Bidding ends this Friday, so call now. 888-205-2263. That's 888-205-2263.
All right, trivia question today was, which actor portrayed Butch Cassidy in the 1969 hit movie? That'll be Paul Newman. He portrayed Butch Cassidy while Robert Redford portrayed the Sundance Kid. The movie didn't win Best Picture, but it did finish 1969 as the #1 movie at the box office. Winner today of the Financial Exchange Show t-shirt was Laura from Plainfield, New Hampshire, and Laura's also registered to win a $100 gift card to Applebee's, which will give away tomorrow. And trivia is brought to you by Applebee's. Enjoy half-price late-night appetizers after 9 p.m. and join Club Applebee's. To enjoy exclusive deals and specials, you'll get a free appetizer just for signing up. Now that's eating good in the neighborhood. Void where prohibited. Dine in only.
Mike, when we talk a little bit about a second Trump term and retirees, what does this mean for their retirement?
Well, I mean, very clearly Donald Trump has made it very transparent that he has no intentions of changing the full retirement age or cutting Social Security benefits in any way, shape, or form. And the same has been said about Medicare. So I think unless you're going to see a full reversal there, that's unlikely to be touched in any meaningful way. I also have a tough time believing that he's going to increase taxes in any way, shape, or form. And so I think you probably have some security that the next 4 years nothing changes with your Social Security or Medicare. I don't think we are likely to get any sort of resolution on the long-term security of those 2 programs. Social Security expected to face a shortfall by 2034. Medicare, I think, is it a couple years earlier or later than Social Security?
Earlier. I want to say, let me take a look. I think it's 29.
There are some other pieces here that have been talked about, and I don't know 2031. So I don't know how serious some of these were, but there was a pledge for no taxes on Social Security, bringing us back to the pre-Reagan ages of Social Security benefits. We will see if that gets any bipartisan support, which you would need in order to do so, but it would worsen the period of time before the program runs out of money, as we've talked about. I mean, big picture, my guess is that there is not a lot to be changed with these 2 programs over the next few years, and I don't know, I think I would feel fairly secure in that assessment, again, for the short term. Do you think there's any possibility of a bipartisan a bipartisan bill for Secure 3.0, for example, which those bills have been pretty easy to pass via, not via party lines, via bipartisan support on, new benefits for 401k plans and things like that.
Yeah, and it does seem one of the things that's just remarkable on those is we continue to just push back the age for required minimum distributions. Remember, it used to be 70 and a half.
Yeah, now it's 75 for some folks.
Then it went to 72, then 73. It's on its way to 75. No one right now is 75. That's not for a few years, correct?
Correct.
And look, I mean, would you be surprised, Mike, if the RMD age gets pushed back further?
No, I wouldn't. That's a distinct possibility.
Push back further, and with the counterpoint being, okay, the way that they've offset that to raise more revenue and make it, make things score well from a budget perspective is, okay, fine. Once the original account owner passes away, then we're making the, non-spouse inheritors take them more quickly. Would you be at all surprised if in the next 5 years we see, hey, RMDs are moving up to 77 or 78, but now the non-spouse inheritor has 7 years to take the money out, as an example.
I think you're not going to get below 10, but again, that wouldn't be terribly surprising, I suppose. But I have a tough time believing you're getting down below 10 years to empty out those accounts.
I disagree.
Okay.
And the reason why, I'm going to make this about generations again, because I love going this route. If there's one thing that I've seen when it comes to how we've handled our finances for the last 20 years, it's been let's subsidize baby boomers and kick it down the road to millennials. I say that as a proud millennial. Look, that's ultimately what this is doing. Boomers are getting older, and the trade-off has been, hey, don't make them take money out of their IRA so they don't have to pay the taxes, but make their kids pay the taxes.
Yeah,
that's been what it is. By the way, the ACA, the Affordable Care Act, did pretty much the same thing. It used to be that you could have a 5-to-1 ratio between how much you charge someone in the oldest age band and the lowest age band, meaning that someone in their 50s or 60s for health care, you could charge them 5 times what you would for someone in their 20s because they use more health care. The ACA narrowed that to 3-to-1. What does that do? It shifts more of the burden downstream to younger people.
Yep.
So again,
bipartisan support for this. I
right.
think is your point.
Yes, my point is that there has been a general bipartisan screwing of millennials, and that's fine. Like I can accept it. I'm not saying this with any hate in my heart. Like that's what it is, and that's where we are, and it's fine. But let's call a spade a spade.
So here is where I would drive this home. If you are not feeling prepared to assess the changes that are almost certainly coming, we spent the first hour and a half of this show talking about very likely tax changes and policy changes that in some way, shape, or form are going to affect pretty much every American. Right?
Yeah.
When you talk about things like taxes on Social Security, when you talk about things like income taxes and corporate taxes, every single American is affected. What would happen to your financial plan if tax rates went down and they kicked back the required minimum distribution age? How would you adjust things in that scenario? Because the time to start planning for it is not 3 years from now when those rules have already passed, but rather today while you can assess that and make the changes in the current tax scenario as you know it. If you are, again, just finding yourself in the position where, I don't know what I would change if taxes on Social Security were altered, or if overall tax rates went down, or if the required minimum distribution age was changed, or if there was a Secure 3.0, how would I adapt and read into all of that? Please, this is why professionals like the Armstrong Advisory Group exist, is to interpret these things and do planning that's in your best interest. If you have questions along those lines, please call the Armstrong Advisory Group at 800-393-4001. Let us sit down with you to assess your personal financial situation by calling us at 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Mike, let's talk a little bit about the Trump administration plans for the housing market. Good, bad, ugly. What are we hearing from people that are plugged into the housing market since... Look, as much as you and I talk about like home prices and stuff like that, like you and I have no idea how the permitting process works. Just as an example,
right? And the housing market is tricky because I think a lot of the real problems come from things like local zoning and permitting processes. And I don't know that there's going to be a whole lot that a Trump administration is going to be able to do to solve that. That's local politics.
They're set locally, yeah.
I can't imagine a Trump policy being very popular of providing carrot and stick incentives for towns to change their zoning procedures. Doesn't seem like it would go well. We're seeing that in Massachusetts right now.
You and I live in Massachusetts, just as an example, which has been trying to make it easier to build more, not easier, but make it required to build more multifamily housing and just like adding housing density to add more units. And, man, it's been messy around here.
Right.
So, and that's just coming from the state government. Imagine the federal government being like, hey, Washington State, you go build more houses. Okay, let's see how well that, it's...
Yeah. So what's possible? I mean, federal tax credits for home builders?
Yep.
Yeah, could see that. I don't know what form that takes. I don't know if there are, designated areas. What was the opportunity zones was the thing that the first Trump administration did.
Yeah.
This was a tax credit involved in, if you invest in these state-selected areas that need economic development, then you'll get a whole big capital gains tax break and different incentives in order to do so. I could envision something new like that specific to housing, for example.
Yeah. You know what's actually interesting? So I used to live in Somerville, and this is just in terms of, trying to make sure that people aren't, and this was even before Airbnb and stuff, but just trying to discourage people from becoming landlords.
Yeah.
And Somerville, I'm sure they probably still do something similar. The first $250,000 of your property tax bill, the value was waived if it was an owner-occupied unit. And that's something that's just kind of interesting to me. Like, okay, that stuff makes, a big difference, but ultimately the problem is also construction. And this is something where I'm not sure how. Like, we talked about this when the Harris campaign was, talking about, hey, we're going to give $25,000 down payment assistance for first-time home buyers. Well, if you give it to everyone and you don't increase supply, all you're doing is driving the price up. You're not actually, great, that home that used to go for $400,000, it's not going to go for $425 because not everyone's a first-time home buyer, but it might be pushed up to $410.
Mm-hmm.
So even when you talk about, tax credits for, building more, okay, how much of is that necessarily going to get passed through to the end buyer? Or does the builder just say, great, now I've got more cushion in the event of a downturn because I'm not incentivized to build more?
I think, again, if you're giving a tax credit that's set up properly to say, hey, you complete construction on homes and you get this credit, again, it's not going to magically create inventory, but it all factors into that math equation. Might not go directly to the bottom line of the consumer. Yeah. It's going to be split, but yeah, I think it probably on the margins would incentivize some building.
Let's take a quick break here. When we come back, we'll do a little bit of stack roulette.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
Last year, we introduced you to Mark Vaughner, CEO of Veterans Development Corporation. Mark is a career military man, and we're proud to have him back as the presenting sponsor of the 2024 DAV 5K Boston.
I'm a proud partner of the Disabled American Veterans, Department of Massachusetts. The DAV does incredible work, and it was one of the first organizations I became familiar with after my military service ended in 1984. As I built my company, Veterans Development Corporation, I did it knowing that I'd be giving back to fellow vets who need jobs, support services, medical supplies, and much more. I work with disabled veterans every day and is one of the key reasons why I'm such a big supporter of Dan Stack and the Disabled American Veterans Department of Massachusetts in this year's DAV 5K Boston. Please join me in supporting this tremendous cause by taking part in this year's event or by making a donation to the DAV.
Veterans Development Corporation is proud to be the presenting sponsor of this year's DAV 5K, taking place on Saturday, November 9th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
Securing your family's financial future is one of the most important elements of estate planning. Cushing & Dolan are experts in elder law. Their brand new guide is called Making the Most of Gifting Assets. It seems like an easy decision to simply leave everything to your children, but some gifts can cause major complications. Call 866-848-5699 and request your guide today. It'll help you understand the pros and cons of leaving assets to your children. Gifting can be beneficial. However, if the gift is a significant asset, like your primary home, and your kids suddenly decide to sell it, that gift could create massive capital gains tax problems. Whether you're deep into the planning process or just starting out, this new guide contains the information you'll need to make the right decisions for your overall plan. Get your guide today by calling 866-848-5699 or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Isn't it time for you to fall naturally in rhythm with America's Caribbean paradise? The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John, and they're the perfect spot for your next incredible vacation. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the peace and tranquility of St. John, the U.S. Virgin Islands has everything you need to enjoy a spectacular holiday. Go to visit usvi.com and check out the American Caribbean, where you'll find all the information you'll need to book a trip that you will never forget. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport required and no money to exchange. Make it a romantic getaway or a week-long family vacation. The friendly folks of the USVI are waiting to welcome you with open arms. So get out of the cold and head to America's Caribbean paradise. Go to visitusvi.com and book your trip of a lifetime today. That's visitusvi.com.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
The ultimate Boston sports auction to benefit the Disabled American Veterans Department of Massachusetts is underway. You could win 2 tickets to see the Patriots take on the LA Rams on November 17th, 2 tickets to see the world champion Celtics against the Cleveland Cavaliers on Tuesday, November 19th, 2 tickets to see the Bruins against the Edmonton Oilers on Tuesday, January 7th, and 4 tickets to a 2025 Red Sox home game. All that plus autographed merch from all 4 teams. To place your bid, call 888-205-2263. That's 888-205-2263.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. With fall in full swing, now's the time to start looking at a fabulous holiday vacation, and there's no better place than the U.S. Virgin Islands. Enjoy perfect weather, world-class dining, incredible beaches, and a vibrant nightlife. No passport is needed, and there's no money to exchange. Take your next vacation in America's Caribbean paradise, the United States Virgin Islands. Go to visitusvi.com to book your trip. That's visitusvi.com. And just want to remind people that the Ultimate Boston Sports Auction to benefit the Disabled American Veterans Department of Massachusetts is open through tomorrow at 11:45. The bid line for that is 888-205-2263. The current bid for all of those items mentioned earlier, including a pair of tickets to all 4 Boston sports teams, including autographed memorabilia and merchandise, is $5,000. And if you'd like to increase that amount and take home these 4 incredible auction items, call the bid line right now at 888-205-2263. All proceeds will benefit the Disabled American Veterans Department of Massachusetts. Now's your chance to support our great American heroes. Call now to bid, 888-205-2263. That's 888-205-2263.
Mike, what do you have for us for Stack Roulette?
I'm interested in your take on the Biden administration's Inflation Reduction Act and its future under a Trump administration. So you have billions of dollars of investment that are going throughout the country on all sorts of different things, many of which actually benefit pretty red areas of the country and big investments in manufacturing. You have a lot of car manufacturers who are very much in favor of the investment. And then you have a administration that is going to be looking to roll back a lot of incentives for things like EVs. Alongside, by the way, the single, well, I actually don't know. I haven't looked at it, but would Elon Musk be considered the single largest financial supporter of Donald Trump during this campaign? Or if not the single largest, then certainly most front and center?
I would imagine he has to be. And I think this is going to be really interesting in terms of, look, one of the things that Trump explicitly campaigned on was, hey, I don't want to build as many EVs. How does that relationship between Trump and Musk evolve? I think that's going to be interesting to watch and see, where they end up, because I don't know. Also, when you talk about, how you end up allocating those funds or not allocating those funds, it's something where, hey, a number of companies have already made long-term investments based on, the idea that those funds would be there. And part of this, again, I think that when you talk about how this dance ends up working out politically, it's, let's say that you are Hyundai, as an example, who spent a bunch of money, setting up EV plants and supply chains in the United States.
Right.
Again, Hyundai's not just going to be like, okay, we'll see what'll happen, you do whatever you want. No, they're on the phone with them right now. Not necessarily with Trump, but with,
sure,
with his staff saying, look, we need you to maintain these subsidies for us because here's how it affects our business. How can we make sure that this happens? That's exactly the conversation that's going on this stuff.
Mm-hmm.
And so I don't know how it's going to play out. I have no idea. The other one, CHIPS Act. Another one that, you've seen the Trump campaign say, yeah, we're not sure that we want to do this. Well, you got foundries that are, costing $20 billion that are being built with CHIPS Act money.
That one had so much Republican support that I have a tough time believing anything significant gets shifted there. The Inflation Reduction Act was purely partisan.
I'm not sure anything gets significantly changed on either of these.
Yeah.
I'm not sure. It might. And maybe part of it is, hey, if you're trying to, still do tax cuts but make it revenue neutral, okay, do you claw back IRA Inflation Reduction Act funds in order to do so?
Mm-hmm.
I could see that being a possibility.
Yeah.
So maybe that's how you make some of the math work on this. But again, the one thing that I consistently go to with U.S. legislation, once something passes via legislation, not executive order, not agency rule, not that
you can't take it away.
It really doesn't go back.
Yeah.
When's the last time you saw that happen?
Right.
There's not much of it out there unless there are sunset provisions that are built in from the beginning. And even then, sometimes we still extend them. See parts of the Bush tax cuts and most or all of the Trump's tax cuts.
Yes.
So even when we put sunset provisions on, sometimes we're like, nah, those aren't real. Let's keep it, move it out another 10 years. That sounds good. So that's where we stand right now. Taking a look at markets as we head towards the top of the hour. Dow's off 15 points. S&P is up 39. NASDAQ's up 270. So we've got mixed markets today, but the Dow only slightly down. Not too much movement there. Bonds continuing to rally a little bit after a tough day yesterday. 10-year Treasury back down 6.5 basis points to 4.36%. We're done for the rest of the day. Back at it tomorrow to finish up the week.